yet standing firm. This is Radio Cayman in the Cayman Islands.
Money Sense is brought to you by the Chamber Pension Plan. For further information, visit chamberpension.ky.
The Cayman Islands Chamber of Commerce Pension Plan. We're here for you. Are you currently a member and interested in the management of your pension plan? If so, consider becoming a volunteer trustee. Becoming a trustee is a great way to play an integral role in the governance of your pension plan. If you'd like to learn more, email pensions@chamberpension.ky or call 745-7630. The Cayman Islands Chamber of Commerce Pension Plan. We're here for you.
Money Sense, bringing an informed financial perspective to the Cayman community.
Good morning and welcome to Money Sense, presented by the CFA Society of the Cayman Islands. I'm your host, Amy Hubble, and today I'm joined in studio this morning by Ms. Sheena Connolly, the owner of the Cayman Islands Sotheby's International Realty and a 25-year veteran of Cayman real estate.
You're making me sound old.
Well,
good morning,
that's
Amy.
That's okay. Old also means experienced, right? And I know it from your bio, it's very extensive. And myself being such a fan of HGTV, she's been featured on BBC's Travel Channel, A Place in the Sun, HGTV's $1 Million Room, and House Hunters International. So I'm going to have to go back and look at those because I don't even think my TV has another channel than HGTV. So I'm so excited about this topic. We were just talking about this. I think that it affects absolutely everyone on this island, whether or not you're rich or poor or renting or owning or looking to sell or looking to buy or looking to renovate or just driving around the island. It's just something that is, as we were saying, it's just something that occurs in everyday conversation. And I think it's something that we are very excited to have as a topic on Money Sense. So thank you so much for joining us.
Well, thank you, Amy, and good morning to everyone. It certainly has been a remarkable year for Cayman, 2020. We were fortunate enough that the construction and the real estate industry was one of the first to reopen after COVID lockdown. And we have seen a very, very strong year. The results and the reports came out last week. The government has derived over $60 million in stamp duty in 2020. There have been close to 2,000 freehold and leasehold transfers, 1950 actually. And a total of $783 million has of real estate in 2020. And that is a very, very strong year for Cayman. I think partly due to some pent-up demand that we had from 2019 also, and some interesting new product. And yeah, real estate is a topic in every family at every age level, and it's a very, very exciting industry to be a part of.
Yeah, and when you say that the real estate industry has been so strong, is that on a full absolute basis, regardless of the pandemic, or is it more of a, we did really well even though we were in a pandemic? I mean, compared to 2019, compared to 2018, was 2020 still a strong growth year for Cayman real estate?
Yes, it actually has been one of the top 3 years ever in real estate transactions in the history of the Cayman Islands.
Incredible.
And even during lockdown, there was over $70 million worth of real estate that has been transacted. What we are seeing very much is that the pressure is on the high end. There's more demand for better product. The AAA areas are driving more demand than ever, and the average sales price is going up. The number of transactions is slightly down, but the average sales price across the board has gone up about 25%.
Okay, so when you say pressure on the high end, so does that mean that the higher, let's say $1 million plus properties, those are moving faster, or there's more demand for more of those on the market? Or what exactly do you mean by higher pressure on the high end?
Well, what we're actually seeing is at the very high end of the market, which is a new trend for us, we actually had 25 sales over $5 million last year. We could go back not very long, only a couple of years ago, and we could count the number of residential sales over 3 million on our one hand. So that has been about a 92% increase. And we are also seeing more discerning product coming. And I think it's a combination of the marketing that the Cayman Islands has done across the board, some pent-up demand. You're seeing some new developments coming out of the ground. And the world's eyes are on Cayman like never before. We now have a Global Citizens Programme that is out. There's been a recognition of our success through the COVID-19. The government has been extremely proactive. And also the tourism programmes that were running throughout 2019, which was a very strong year for tourism. Programmes such as the Cayman Kind programme and the award-winning Dream in Cayman, all the marketing that the quality offices are doing around the world for Cayman now, the digital marketing, I think has increased, and as I say, the eyes of the world are now on Cayman like never before, and we are looking at a very strong 2021 in real estate.
Right, and I guess what everyone in our listenership and on this island already knows is that it is a wonderful place to live. It's a wonderful place to raise a family. It's a wonderful place it's very safe. It's a great place to live. But where are these buyers coming from that high end? Are they coming from people that live on the island? Are they coming from these kind of snowbird situations? Or are people buying these things, especially sight unseen, that they can't even necessarily just, come see it if they don't live on the island right now, right?
It is. That's a very interesting question, because I think it's a combination of all of the above. Through the digital mediums, we're now seeing more reach than ever before. We're using virtual tours, videography. Beautiful images of Cayman are going out. TechSmart, the new developments, you can walk through and actually see them before they're even built. The combination of all the social media, you can even furnish your apartment now and see it as you would be able to buy it. I do believe that all of the technology is helping increase demand. And then there is the strength of the financial industry, and that we're unique in the Cayman Islands in that respect, is that we're not solely dependent upon tourism. And many of the homes that you see that are being built and the condominiums that you see that are being built here are being bought by people who are in the financial industry and all of the related industries, the reinsurance, etc. So that is very encouraging, that people are feeling that they want to put down more roots. They maybe want to buy a more substantial piece of real estate and sell what they had. And right sizing and lifestyle is becoming something that is ever more in people's minds, especially through the pandemic, finding the right type of real estate that suits your family. Sometimes people may want more garden, they want more studies, they want different, a different style, and people are looking to move and improve their real estate lifestyle if possible.
Yeah, let's talk about that right sizing. And I know I've been hearing about the Builders Expo and everyone doing a lot of renovations to their house. And especially I know a lot of properties kind of start as 2 bedrooms. Are people taking this opportunity to expand their house when you say right sizing, or are they actually moving houses?
I think it's a combination of both. We've seen a lot of funds being taken from people's pension plan, and much of that was put into improving their existing homes, or perhaps buying a piece of land, or putting down a deposit, or maybe helping their children to put down a deposit. Because the question that I'm also hearing every day is, how can we afford to buy real estate in Cayman anymore? The younger ones, the first time buyers, right. The prices are increasing. And the circle in the area of demand is ever more from I would say the Hurley's roundabout, the tremendous amount of development that one is seeing.
There's probably a lot of listeners in the Hurley's roundabout right now listening to us saying yes.
Yeah, and hopefully we will see increasingly better road structure. But from that area of the Hurley's roundabout right up now to and throughout West Bay up to the shores, that seems to be the area that's constantly under pressure, and more people are wanting to either get closer to work or be on the 7 Mile Beach corridor.
Sure, and who can blame them? But so let's talk about supply in the market in terms of the new developments. I know that Sotheby's especially focuses on that higher end real estate, but in terms of kind of the whole island, obviously we can see it with our eyes what's happening in terms of where a lot of those developments are, and all the way along South Sound is just completely a construction zone, the entire coast especially. But as we grow, we're obviously going to need that supply from the very lowest end of housing to the highest end. So where are we seeing kind of those new developments, and depending on kind of where you are in the price point, and from your perspective, I guess, in from someone that's looking to buy for the first time, should they be looking to buy in one of these new places? Should they try to pick up a quarantine deal that used to be a rental? Kind of give us your kind of perspective on those new developments, and can we support it at this point?
The range of product of real estate for the Cayman Islands is tremendous. I think it's possibly the broadest range of anywhere in any Sotheby's office across the world. And we have product here from several $100,000 up to many millions of dollars, and obviously not everyone can afford many millions of dollars, but we are seeing the new developments coming on 7 Mile Beach, and they are touching the highest prices that one has ever seen now.
That's like the Lacovia property.
Yes, like Lacovia, Watermark, the new Aquabay is coming, which is an interesting product, Seacrest. And then we are seeing also some more affordable product in the Prospect areas, the Savannah areas. South Sound has some great product, and we're looking at projects like the Davenport projects, Aura, the NCB projects, and all of that's happening there, Harbour Walk around Grand Harbour. Now, many of these developers, when you speak to them, interestingly enough, their contracts that have been pending conditional have actually moved to pending state, and there has been very little fall away. So I think that is showing a lot of confidence.
So tell us what that
market.
means. That means somebody that's reserved it is going to buy it, right?
Yes.
Okay.
Yes. So I've seen very few people backing out of the contracts that they had, which is another very strong sign for Cayman. I think the challenge and the difficulty is going to be finding product that is more affordable for first-time Caymanian buyers.
Right.
That is not, so far out that people are stuck in traffic.
Exactly.
And hopefully some more road infrastructure will help that as well. Georgetown Revitalisation Programme, I think, is one that could bring a lot of interest. Life and vibrancy to the area of Georgetown, mixed-use buildings. It could bring better parking, more green space, pedestrianised streets, cycle lanes. We're seeing a transition in the quality and style of real estate in Cayman, which is very exciting. And I think the government has done a really good job on thinking to revitalise Georgetown, and the Plan Cayman discussions and reviewing the development plan is also an exciting opportunity. Cayman Bay is forever strong and getting stronger. It has got to be one of the finest examples of new urbanism in the world, I would care to say. And everybody that comes to Cayman that's knowledgeable about real estate is extremely impressed by the quality of the disciplines that are here, and the product and the range of product. So it is an exciting time in the Cayman Islands, and I feel that there is a lot of confidence here.
Yeah. Well, thank you so much. And with that, we're going to take a quick break. I know this has gone quickly, but stay with us and we'll be back in 1 minute with Sheena Connolly of Sotheby's Real Estate.
The Cayman Islands Chamber of Commerce Pension Plan. We're here for you. Are you aware of the performance of your pension plan? The Chamber of Commerce Pension Plan provides quarterly fund fact sheets for our members to stay informed with the plan's performance. For the year ended August 31st, various life cycle funds provided returns between 9.2% and 16.5%, and our all-in expense ratio is currently the lowest it's ever been, a record low at 0.72%. Visit chamberpension.ky to review our fund fact sheets. You can see the performance as far back as 10 years. Remember that pensions are a longer-term investment strategy. Focus on the long term rather than the short-term returns. The Cayman Islands Chamber of Commerce Pension Plan continues to perform for you.
Money Sense, the only personal finance radio show in the Cayman Islands, hosted by Simon Caudry from the CFA Society Cayman Islands.
This is Money Sense.
Welcome back to Money Sense as we continue our conversation around real estate in the Cayman Islands with Sheena Calling of Sotheby's Real Estate. Welcome back. So right before the break, we were talking a lot about new projects and the really strong demand that we're still seeing in real estate in the Cayman Islands, despite the pandemic, despite the loss of tourism. But we didn't quite touch on what's, I believe, probably a very large portion of how people live in the Cayman Islands, and that is the rental market. And the rental market is also going to drive the ultimate prices of the buying market, right? In terms of, for the most part, a lot of these investment properties are being bought to be rented. And if you can't rent to tourists, who are we renting to? And do we have the demand for both the people that actually live here to fill that demand, or are we still very dependent on tourists for that rental market? I know even myself, my rent has gone down during the pandemic because I moved and I was able to get cheaper. So I know that that's happening. But do you see that affecting the prices, I guess, in terms of how people are being able to move to 7 Mile Beach or things that they would not kind of usually been able to do based on the rental market? There's a lot of questions in there.
I am surprised that we haven't seen more adjustment in the rental market that we're experiencing. I do know quite a few friends that have looked to move to see if they could find something more affordable. Some people have rented on 7 Mile Beach for a short term, but I think that these may be a 6-month opportunity, but the market will be coming back when tourists and when the island reopens, which will hopefully be certainly in the next 6 months,
so you
6 to
see
9 months.
a full recovery in terms of the rental market pretty quickly.
Well, I do, and I think we're fortunate in Cayman that we don't have any annual taxes on real estate, so people are affording to hold their real estate and they're wanting to keep it. The long-term rental market has remained fairly strong. Those looking for short-term markets sometimes have been able to benefit from people using staycations, and I think more of us have been learning to enjoy our islands and our sister islands more than ever before. And the Airbnb options and the short term and the luxury villas will come back. So I think it's interesting that there hasn't been as much correction in the rental market on the long term basis that I would have expected. I know we've lost about 5,000 people on the island. I believe that's around that. So I think that people are becoming flexible as to offering their units for staycations, and of course they need to have the tourism licenses in place to do so. But I am optimistic, and we're not seeing price reductions. In fact, we're seeing price increases in the sales market. It'll be interesting to see what happens in 4 to 6 months' time, whether or not there will be more units on the market at different rental rates and more options available. But certainly we're not seeing a huge correction in the market.
Okay, well, all optimism. Well, let's pivot and talk about whether or not you're buying or selling. What if you are looking to purchase a house? Maybe you've been able to save a little bit of money last year because either you took out your pension or you didn't travel last year for whatever reason. You were able to save a little bit more money. What should be the first thing that you do if you're starting to think, I'd like to purchase real estate in the Cayman Islands?
Well, the first thing that we would recommend that you do is make sure you know the level of expenditure that you can put into your future home. Mm-hmm. And that would be by visiting the banks, because several of the different banks offer different plans. And so you really need to know how much you can either go shopping with or how much you can afford to build with. There is an interesting discussion about the build v the buy. Obviously, if you're going to build, it takes a longer time. The cost of construction, the cost of architect's fees, all of the substructure, the specification that you need. It really is a complex project when one makes the decision to build their own home. And very often it can end up being a lot more expensive than the initial budget would
yes,
portray.
We all know that.
So there is time and stress involved. And so I think it's a very good exercise to look and see what is available currently in the marketplace, knowing and having researched with several banks as to what your financing options may be. The banks, I believe, are tightening the risk position somewhat in the next few months. And it takes quite a lot of money to get into the market in real estate because the down payments are fairly high, the level of fees are fairly high. So you really need 20 to 25% of the total cost price to even consider getting into the market. So everybody needs to start saving.
And so that's really even before stamp duty too. So you're looking at, to get the lowest rate, which right now we are at the absolute lowest rate that we've ever seen for most of the banks. But you did mention that a lot of the banks are tightening the risk position, which means they are being a lot more picky about who they're lending to, right? But so you walk into it, we need to walk into all the banks and interview. This is the first step. Be prepared to put 20% down to get the lowest rate, then another 5% for all the fees and the appraisals and everything else. And then stamp duty, right? That's a 7.5% cost, and then another 1.5% on mortgage stamp duty, right? So that is quite a bit of money, right?
Yeah, it is. By the time you calculate it all, between the valuations, down payments, your stamp duty, bank fees, government fees, legal fees, and you do need a substantial amount. And we are seeing quite a diversity in the product that the banks are offering. Obviously, if someone is in a strong financial position, can put down more into a down payment. The banks are actually offering some tremendous terms right now as well as tightening certain risk positions. So it depends on an individual basis. It needs quite some analysis. And there are some interesting lenders in the field now as well. If someone is coming in with a strong position of wealth, they may have stocks or shares or bonds. And there is some creative financing that's going on at the high net worth level. If anyone would need any specific information, of course, on, please feel free to contact us and we can give you further direction on that as to the names of folks you may want to talk to. But it is interesting to see the diversity of the financial product that is out there. And of course, the more one can put down, the better one can negotiate the rates. And the interest rates are very low right now, 3.25 prime. I go back to the days where lending was, at 11% sometimes. It's staggering to think of that. But
it really is.
It really is a good time for people to analyse how they can benefit from these lower interest rates.
Yeah, and especially, I know a lot of people don't take a lot of stock in terms of the difference between a fixed rate mortgage and a variable rate mortgage. And I think historically we've seen only variable rate mortgages offered in Cayman, but I've seen a lot more banks be open to this fixed rate. And if you can lock in a fixed rate of 3.25% for 30 years, that's a pretty good rate.
Well, I would think that would be quite challenging. It is interesting that in the United States and in Canada and in the United Kingdom, that real estate has also been moving quite briskly. The United States has had record-breaking years, and the National Association of Realtors have adjusted their 2021 figures and increased their projections. They're finding all kinds of things through the pandemic. People are wanting to move to more rural areas. They're wanting to have a second or third home in a safe and secure destination for their family. And I think Cayman is benefiting from that aspect also.
Yeah, figure if you have to stay home all day, that you might as well enjoy where you live and have a little more space maybe from the people that you live with.
An interesting point on stamp duty is there are benefits for those people who are first-time Caymanians that are buying stamp duty, as we know. So they get a reduction in stamp duty, whether it be on land or a residence.
And this is the first time, right?
First time, yes. And they're not allowed to sell it within 5 years.
Okay.
And it's to help the Caymanians that are buying their first property get onto the property ladder. So it's 0% in residential up to 400,000, and then it goes in a sliding scale. So you could pay 2% or 2.5% up to 600,000. There are certain blocks and parcels that doesn't apply to, but it's a very good incentive. And the other thing is, at a higher end, some of the developers have taken the advantage of paying stamp duty on their developments, which means that the purchasers of their specific developments could benefit from a stamp duty reduction or zero stamp duty, but that window of opportunity is only open until the end of June of this year. In some of the developments, it used to be that you could purchase a land contract, right, and then you could have a building contract, and it was as if you were building your own home, but you were buying into a new development. But the government has closed that loophole on stamp duty, so that is in essence making sure that everybody going forward is going to pay stamp duty on the full price of the product that they pay. But there are certain developments that have benefited from paying on the land cost early. So that is also another interesting opportunity, because that would have significant savings.
Yeah, absolutely. And forget about that sometimes. But what about sellers? If you are now looking to maybe sell your house, what's the first thing that you should do?
Well, the first thing that you should do is really see if you could get an accurate appraisal of your property. Because sometimes in a market that's a strong seller's market, as we're seeing in Cayman at the moment, people are of the view that the real estate is worth actually more than it realistically is. So we would always encourage being aware of what you're competing with that's in the market, being aware of what has sold in the past, being aware of the valuation that a valuer would place on your property, because most people will require some kind of financing, and the banks will require a registered licensed surveyor's appraisal of the property in order to go forward. So that is also a very interesting research for people to do, and not just simply think that the real estate is worth 3 million when it's, maybe worth 2, or etc. Right. All across the board we're seeing people are trying for bigger prices now than ever before, and it's interesting to see that some people are achieving higher prices than ever before. But I think there has to be also realism as to the actual value, or the expected market value that their property will sell for.
Of course, we always love our property the most because it's ours, right? And on that exact topic, though, how long should you expect it should sit on the market, or how often? I mean, I know it would depend on the price point and depend on the location, but how long are we seeing these properties kind of sit? I know traditionally it's been an expectation that it would be waiting a year, basically, to sell at the full kind of price that you're thinking.
Yeah, there's a very broad difference too with that, because we are seeing some properties moving off the market now within, or at least going under contract within days. And then we're seeing other properties sit on the market as has been traditional in the Cayman Islands, but some properties are sitting on the market for over a year. In a perfect world, we are, and then of course there's all the pre-construction that's coming out. That takes time, but because one can't close the sale until obviously the construction is finished. But average days on the market is shortening. And it depends on the level and the style and the price point of the product. If one was setting about building their own home, you really realistically need to give it about a year and a half from start to finish, and that is probably conservative. And that's another benefit of buying what is out there if you're time sensitive and you want to get onto the property ladder. But you shouldn't be doing anything in property really unless you're thinking about a 5-year term at the minimum, I would say. So the good news is that there is confidence. People are wanting to put down more roots. It seems, that Cayman is got the attraction of the world. It's such a safe place to live. They're looking for second homes. I think a lot of people also have been rethinking the way that they live because of COVID and the pandemic. There is about $1.7 billion worth in upcoming development at the moment, which is a pretty staggering figure. So time in the market is something that is such a variable because we're seeing such a broad spectrum of the different products and how long they're sitting on the market. But certainly, if it's priced properly and if it's marketed well, you should be looking to have your property under contract, I would say, within 6 months.
I see. So the answer is always it depends, as many times the answer is on this show. Well, unfortunately, we are out of time. Time always goes so quickly. Thank you so much, Sheena, for joining us. And
thank you very much for having me this
letting
morning.
us pick your brain, because I know it's something that we're all always talking about and wondering about. As a reminder, a recorded version of today's show can be downloaded via podcast on all your favorite podcasting apps, as well as on Radio Cayman's YouTube channel and the CFA Society Cayman Islands website. If you have ideas for future shows or want to continue the conversation, find us on Twitter at MoneySenseRadio. And Sheena, how do we contact you or Sotheby's?
Our website is sircaymanislands.com.
All right, you heard it. And with that, goodbye for now, and we'll see you again in 2 weeks' time.
Bye.
The Cayman Islands Chamber of Commerce Pension Plan. We're here for you. Please be advised that the pension contribution holiday has been extended until 30th of June 2021. Employers and plan members should ensure arrangements are in place for salary deductions and remittance following this date. The Cayman Islands Chamber of Commerce Pension Plan, keeping you informed. For further information, visit chamberpensions.ky, and for information as it happens, follow us on Facebook, LinkedIn, or Instagram. Email admin@pensions.ky or call 745-7630. We're here for you.
Money Sense is brought to you by the Chamber Pension Plan. For further information, visit chamberpension.ky.